Oh boy, here we go again. Back to work. Boy, what a fantastic day today. One of those days you love being a trader. Don't you just love planning your trades, trading your plan, and making some bank? Boy, now back to work tonight. Let's refocus. We got a big day coming tomorrow. Let's keep the good times rolling. Now, speaking of tomorrow, we got some nice big moves in the charts tonight. Anytime we see a big move, like we saw on the Nasdaq and the S&P, there are a couple really easy ways to make money the following day. We're going to cover those in the video tonight. But most importantly, though, whenever we see big moves like this, there's one specific trade set up. We don't get it all the time, but hopefully tomorrow is our lucky day to finish off the week with a bang. We'll talk about that, my favorite trade after a big move like today. I'm going to cover all my favorite trades, of course, in the video tonight. I want to make sure you guys have a roadmap to make some more money on Friday. And before we jump in, though, and keep the party rolling tonight, before we talk about trades for tomorrow, make sure you subscribe to the channel. I don't want you to miss tomorrow night's video, so make sure you subscribe. And if you guys enjoy these lessons, if you like these videos, hit that like button. Give me a hell yeah down in the comment section. Thank you so much for tuning in, supporting the channel. I know I'm running late tonight. Thank you so much for your patience out there this evening. Thanks for stopping by and supporting the channel. Now, let's get into it. Where are the best trades setting up for tomorrow? Well, I got my NASDAQ, my triple Qs in front of me, my S&P and my SPY in front of me. What are these 60-minute time frames telling us right now? Well, we got the reversal we talked about in last night's video. If you missed last night's, you missed a doozy. Bull market into a trading range, bull market into a trading range. We talked about the perfect spot for a reversal in last night's video. We got that reversal, and now, of course, buyers are on their way to take out these highs, complete their pendulum swing, take out these highs, and complete these pendulum swings. So everything kind of working as we thought it would this week. Now, the real clues, the real entry clues are going to be on the tick charts. That's where the most important clues are going to be for the entries tomorrow. Before we dive in, though, to the tick charts and talk about entry tactics, let's dive into our schedule for tomorrow real quickly, because there are two things I want you to be on your radar for tomorrow. First thing is home sales, right? 10 o'clock Eastern time. We get home sales and consumer sentiment. That sentiment number is a big number for tomorrow as well. That is the big news that we know about for tomorrow as well. There's no major earnings reports to worry about. I'm not going to worry too much about Fed speakers tomorrow as well. The second thing you want to be aware of for tomorrow is a Friday. And Fridays are a different day than other days of the week. You have to understand that as we get later in the day on a Friday, the volume will dry up, liquidity dries up, and also too, rookie traders, inexperienced traders, they tend to take bigger risks on a Friday. So here's the deal. On a Friday morning, my mindset is get into trades early when liquidity is good, when the volume is good, take some profit early, remove the risk early, but try to leave a runner into the close. Fridays love to run. So Friday mindset, get in early, remove risk, grab some profit, but I always try to leave a little piece open because markets get illiquid, rookies get trapped, markets tend to move on Friday afternoons, and I'll tell you, if we play our cards right for tomorrow, we might get another big run tomorrow afternoon. So keep that on your radar. 10 o'clock is the consumer sentiment and the home sales number, and again, that Friday mindset, early in and let her run. Now, back to our charts, though, because, of course, the money is made on the charts. Let's now go over my favorite trades here for tomorrow. Let's start first right now on the S&P and the SPY, and we'll finish up tonight on the NASDAQ and the triple Qs. As I mentioned in the introduction, and pretty much as I've been talking about all week this week, bullish into a trading range. We talked about how we were at support below the range, and we were looking for that reversal yesterday. We got that reversal. If you're taking my free video classes right now, we talk a lot about rotation. And so now we look at the amount below, we project that amount above, and we pretty much know where these buyers are hunting for. So going overhead now, the buyers have one thing on their mind. They want to take out these highs, and finish off that pendulum swing going higher. So how do we time the entry on this right now? Because I don't trade off a 60-minute chart, right? You probably don't either. Let's drill down to our tick charts. I use tick charts to trade off of in our trade room. This, of course, is a 7,000 tick chart you'll see linked up in the upper left-hand corner. And if you're watching for the first time right now, that is the 21 EMA. It is the only real indicator you need to find lots of profitable trades with us in the trade room. There are two really important clues on these tick charts. First one is the size of that move. Nice big move we saw this afternoon. Now, whenever we see a big move in one direction, I don't want to buy high up here, right? I want to buy nice and low, especially on the Nasdaq. We'll take a look at that more here in a moment. Whenever I see a big move in one direction, I always like to look for a two-legged pullback and a retest of that high. Now, we're going to go into a lot more detail of what the two-legged pullback will look like and how to time the entry on that. So bear with me. We're going to get into more of that as we go. But that's one very important clue. Anytime we see a big move in one direction, we expect a two-legged pullback and a retest of that high. The second clue is also very important. It's a range breakout. We had a kind of a smaller example of exactly what we talked about on the 60-minute time frame. It was bullish into a trading range. We get that beautiful bear trap underneath that trading range. And by the way, if you watched last night's video, there's that two-legged pullback. A little bit more than a measured move. If you watched last night's video, you were locked and loaded on that today. Get a bunch of emails on that. Well done on making money on that. But now, we now have that strong breakout. And anytime we break through the pendulum swing, notice how we broke right through that pendulum and kept on going. That's a very good sign now that a breakout pullback is coming next. What we do is we take that trading range and we start looking for this now to go up and pull back and, of course, bounce off that trading range. So as you can see, both of these clues put us right in that area, and we'll talk about here in a moment at a time that perfect entry on this breakout pullback. Let's talk about two-legged pullbacks first, because these are some of my favorites we use in our trade room. When I say two-legged pullback, we're thinking about a two-legged move that usually goes a little bit more than a measured move. You want to get under the moving average, 21 EMA. Think about a measured move or an ABCD. So one leg, two leg, and a little bit more than that, right? We saw the same thing today, right? One leg down, two leg down, a little bit more, right? A little bit more than a measured move. Now remember, when I get that two-legged pullback, I'm not going to simply blindly buy, right? We're not going to simply blindly buy that area, because for all I know, we're going to wind up all the way back down to somewhere down here, and don't you worry, I get a pretty good game plan if we do get that big drop. I get you covered on that. We'll talk about that here in a moment. But right now, though, I don't have a crystal ball. It may keep on rolling lower. So rather than trying to simply buy that trend line or buy that breakout pullback, what we'll do is we'll look for this very simple combination trade. And that is what we call a failure into pullback combination. I'm not going to try to pick that bottom. What I'll do is once we start getting around support levels down here, let's see if these bears come in, and let's let them try a couple times to send this price lower. They may be successful, but if those bears struggle, now we know where their stops are. And think about this. If you are short and you get stopped out of that position, how do you get out of a short trade? Only one way, right? You got to buy your way out of that move. We can squeeze those bears. One try for the bears, two try for the bears. We call these two try failures in our trade room. I teach this, of course, in our free video classes. A two try failure after that two-legged pullback to support. And then watch closely here, because we know that in a big move environment like this, we know where the market wants to go, right? It wants to go back up and retest the high. So as we go higher here, I want to buy as low as I possibly can, right? It's one type of entry pattern I look for to buy nice and low, and that is a bear trap. Okay, so this is going to be kind of the basic idea of a two-legged pullback. It's it's a bit more than a measured move. We then don't pick the bottom. We trap the bears in, one try, two try, buy into those stops, and then again, as we go higher, get that higher high in price and that bear trap, just like we teach in the free video course, all right? Now, every once in a while, we get some variations of this, okay? So let's say, for example, we get a very strong run going lower, and sometimes the pullback, sometimes this two-legged pullback is so strong that what happens is, let's go forward a little bit here, give myself some more space here. Sometimes this two-legged pullback is so strong, there's so many bears that come in that they pull back and they retest that low. All right. So instead of getting a 1, 2, and then buying into stops back up, which of course is the ideal game plan for tomorrow, sometimes it pulls back to that moving average and retests that low. Now think about what happened in this situation. The sellers are getting in on the pullback. Where do you think they would take their profit? They take their profit off at that retest of that low, at least a big chunk of that profit. So is it safe to say that the sellers who sold here are going to be buying their way out right there? All right, so sellers are buyers in that area. Now let's see if we can get some rookies coming in. Can we all agree this would not be a very good place to sell short? You're in an overall bull market, a strong run up in the short term, and we're at support on this tick chart. Probably not the best place to sell short. If I can get some rookies coming in, and again, I'm not going to pick the bottom. I don't have a crystal ball. Nobody does. But if we see the bears try a couple times here, I'm going to light those stops up. Buy right into that pain and squeeze those stops. And again, think about that pop up and then buy as low as you can with that bear trap. All right. These are pretty common, the two-legged pullback and the double bottom, right? Double bottom retest. I know a lot of you guys have learned these already, but let's slow this down a little bit though, right? Because I know most of you guys know these, you're trading these, making money with these. But if you're here for the first time right now, this might be way over your head. It might be all brand new information. What are two-legged pullbacks? What are bear traps, crown reversals? Don't you worry. I teach all of these setups. I have hundreds of examples of everything I'm talking about here tonight, all included in our free video classes. What I'll do is I'll put a link up here for you. I got you covered. I'll put a link up here for you, upper right-hand corner. Grab that link that popped up there and take that free trading course. The strategy I teach in that short video series will teach you a simple trick we use in our members trade room to know exactly where the best winning trades are going to be each day. More importantly, though, I'll teach you 4 of my favorite entry patterns to help you start making money on your own. Guys, the markets are way too good right now not to be making consistent money. If you're missing the good trades, are you taking the losses? If you're struggling to qualify for a funded account, hit that link, take that free course. It's perfect for someone trying to make the jump into full-time trading. The entire roadmap's right there in the upper right-hand corner in that link right there. Also, too, if you can't grab that link, I'll put all the special links tonight. I'll put all the stuff in the description of the YouTube video, my free course links, our members trade room links. We actually trade together every morning at 8 o'clock Eastern time. I'll put that all in the description as well. I'm also on Twitter. I post a lot on Twitter or X during the day. If you're on Twitter X, right, definitely hook me up in the description there and give me a follow. All right, so now you know kind of the basic idea. Whenever I see that strong, big move up, that two-legged pullback, and again, 1, 2, back up, and it may go 1, 2, back up. It may hold that recent low, retest that low, and we might be in store here for that double bottom, that 1, 2 double bottom reversal. Remember, stay focused on going back up to retest the high. Now, sometimes we get a V bottom. The least attractive trade here on this is a V bottom. You know, we're at major resistance right now. It's been a nice run today. We may see a very strong shot going lower, but I may not get the chance to time the entry. 1, 2, I may not get that shot to time the entry. The market may V bottom and kind of boing right up off of that low and begin to grind and go higher. All right. If it grinds and runs higher like that, whatever you do, do not chase after it. Okay. Do not chase after it. If we learned one thing today, when a market V bottoms off that low, do not chase after it. Right. Wait for that pullback. And what I do is I draw a trend line off those highs. I mark that channel off that low, all right, I look left, I find prior swings, and I try to get in off the first test off that channel low. Now, I can't go into all the details right now, but this could be any of the entry patterns you guys are learning in the free video course. It could be a bear trap like I'm showing you here. It could be a seller failure pattern below the 21 EMA, a failure, pullback combination, a strength move on the way back up to retest the high. If you're taking my free video classes right now, that should make a lot more sense. If you have questions though too, don't be afraid to type those questions in the comment section below. So that is a V bottom reversal, right? Not the most desirable. I would like to buy way down here, but you know what? That's the way it goes sometimes. We take whatever the market can give us. Now, again, I'm going to talk about if this thing dumps, right, here in a second. How would you short this, right? What were some ways to short this? Well, first of all, we're an overall bull market, right? We're at an area of resistance. I'll bet we're going to get a nice juicy pullback here. How would you short this? The only way you can short a bull market like this, well, you can do whatever you want, but the reliable way, the consistent way to make money shorting a bull market is to make sure you're at resistance, which we are right now, and now look for a bull trap. Okay, bull traps look like this. As we pull back, the buyers will try once, we'll go lower, the buyers will try twice. Watch closely. It's a lower low in price. Okay, very important, lower low in price, right? And then you get that bull trap off the high like that, right? That's how you short a bull market during the pullback. Now, as I always remind you guys, these are against the trend. They're not as reliable. Therefore, they're not going to be, at least not for me at least, they're not going to be full-size positions, right? They're half size. They're quarter size. If you're new to this stuff, they could be zero size, right? So choose wisely when you go against the trend, because sometimes you get stuff like this where it'll go up, right? They'll try to hit it, right? They'll try to hit it, but they can't quite get it to roll over. That's why I want to go smaller size on the counter trend stuff. But that bull trap, right? That bull trap, that's one way to short this. Another way to short this would be, let's say we get that deep two-legged pullback. Let's say we get that juicy two-try failure, right, which we all love right now, and we get that run back up to retest the high. When I retest that high, think about who's up there, right? Who's up around those highs? Rookies. Right? What happens down here? Buyers buy low, right? So buyers are taking their profit. Buyers are going to be selling as they go back up to retest the high, right? That's what buyers do. They buy low and they sell high. So if we get some rookies coming in, can we all agree, right? This is a horrible place to be a buyer, even if we're a bull market overall. Right? So I don't want to buy there, but if I see some inexperienced traders coming in once, coming in, twice coming in, right? This is that bull trap. I call these crown reversals in our video classes, but that also is a way I can short this thing off the high. Right? Okay, so we get the two-legged pullback, right? Grab that bear trap, squeeze those bears back to retest the high, and then do we start seeing rookies come in? Because, you know, these are not professionals up there. Professionals are not going to buy into that high here. Remember, I'm not going to pick the top on this, okay? That's a rookie mistake. For all I know, it'll keep on running because, again, we're overall bull market. But if I start seeing these buyers come in, remember, lower low in price, buyers want to buy low. They want to buy low. Once they buy a couple times, now I know where their stops are. And if you're long and you get stopped out, only one way out. Close your long position, right? And it flips you short, right? So that's the only way to get out. That's why those trades work so well. Now, last thing here, and then we'll grab the NASDAQ here, right, is what if this thing dumps, right? What if this thing dumps? Because, you know, again, big move today. We probably don't think a lot of buyers want to buy high up here right now. We'd like to get this deep pullback and back up to retest the high. But what if we end up just dumping off this high right now? What would we do? I want to buy down here. I love the idea of buying at support below a trading range. I love the idea. What's the problem though? The problem, momentum, right? If we see a strong run down like this, what's going to happen? The bears are going to come in and they're going to want to pull back and retest that low. Because anytime we see a strong move in one direction, we expect, in this case, a retest of that low. Okay? There are two easy ways to make money if this thing takes a bath. All right? And again, if it rolls lower and begins to roll, you know what to do, right? You know the short. The short is the bull trap, right? On the way down. Sell as low as you can. Now, once we wind up around these support levels now, we have to respect those bears. Even though we are a long-term bull market, short-term momentum is really, really important. This is where a bear trap or a crown reversal comes in handy. Trap those bears in once, get them to try twice, and I want that bear trap on that entry going higher, right? Now, why this pattern? Why this pattern? Again, I like the idea of being a buyer down here. However, the strength of that move suggests we're going to come up and retest that low. So I need to be buying as low as I possibly can. I need to get those bears once, bears twice. I need their stops to fuel that move going higher. And most importantly, what happens a lot of times is on these crown reversals, you'll get that pop up, but they're going to hold the underbelly of that move. You'll be in the green on that trade, right? But then what happens is the bears come back in and they run back down to retest the low. This is why you have to buy as low as you can whenever you've got a really big pullback in overall bull market, right? Because in this example, I'm already in the green, right? I've already got that stop up to point of entry. I've already taken that first one-to-one profit target. There's no risk on this trade anymore, right? But if I buy as it goes higher, right? If I'm buying as it goes higher, I'm walking right into a bull trap. Okay, very, very important you understand this simple technique. Now, once they retest that low, now everybody who sold short right here, they're taking their profit here. This is exactly the situation you want because now that double bottom comes in. 1, 2, I can be a lot more aggressive on that double bottom retest, right? I can be a lot more aggressive. But again, I'm not going to pick the bottom. We're going to use that same 2-try failure, and I'm running out of space here. But as we go higher, it's that bear trap getting in, right? It's that same double bottom game plan that we talked about a moment ago. So keep an eye on if we do get that bath, right? If this thing just drops off this high, which when we look at the NASDAQ in a moment, you'll see why I say this could easily happen for tomorrow. Trap those bears in, that crown reversal, buy as low as you can. And again, hopefully this thing will just squeeze right back up and take out those highs. Hopefully it's a nice, easy winner for us. But a lot of times that big move down like that, they're going to sell that pullback. They're going to retest that low. And that oftentimes, that double bottom reversal is oftentimes the most lucrative trade of the day. So leave that runner because again, tomorrow is a Friday. All right. I know I covered a lot here on this S&P, so don't be afraid to go back and watch it. And of course, we'll do this, of course, tomorrow morning, every morning in the trade room. Let's keep going now over on the NASDAQ. The NASDAQ, I want to talk about that one kind of special trade that we don't always get, but I hope we're going to get it here for tomorrow. On the NASDAQ right now, NASDAQ 60-minute, get it started here. We have a very strong run going higher right now on the NASDAQ, but look where we are right now, right? Look where we are right now. We're running into a lot of overhead resistance on the NQ. The NQ is a few stages, a few steps ahead of the S&P, and we're now running right into all that major resistance. Now, what do you think, right? If I have a strong run higher, what do we usually get of a strong run higher? A pullback and a retest of that high. Okay, into an area of resistance like this, we really want to buy as low as we can. Right? We really want to buy that deep pullback on the NASDAQ for tomorrow. Now let's go to the tick charts. Right? The tick charts really do a great job at illustrating just how challenging this area is. There are two really big clues on the tick chart. You'll notice this is a 4,000 tick chart in the upper left-hand corner. The first clue, of course, is that strong move. Right? It's a strong move into resistance. Okay, that's the key. We don't have a lot of space overhead like we do on the S&P. So I want to buy as low as I can. It's exactly where that two-legged pullback game plan I mentioned earlier, right? That exact same game plan, right? That two-legged pullback, remember that? A bit more than a measured move, trap those bears in, right? And back up to retest the high, right? Same game plan we talked about on the S&P a moment ago. And you'll notice right away, right? That range breakout. Look at the range breakout here. Look at the difference between the S&P and the Nasdaq. This is that bull market into a trading range. Gorgeous, right? What a gorgeous, I had some students this afternoon. Gosh, what a great afternoon for our students this afternoon. Off that high, off that low. I mean, come on, right? Come on. Pendulum swing, support level, channel support level. My goodness, great example there of using ranges to time perfect entries on that. But now, look what happened. The amount we go below, the amount we go above. Does this look as convincing as the S&P? Does that look as convincing, right? Look at the S&P back here for a second. Look at the S&P, right? The S&P, that's a lot more convincing on the S&P, right? The S&P is pretty convincing breaking through that pendulum swing. Look at the Nasdaq now. No, right? It's not, right? It's not. So the Nasdaq really has not broken out of this trading range. We are very bullish. You can easily see that. But we got a big problem with resistance, resistance, resistance. So the most important thing in the Nasdaq is to buy as low as we can. The good news, though, is the same game plan we talked about on the S&P can pretty much be applied almost verbatim to the Nasdaq, right? I want that two-legged pullback, trap those bears in, right? If they wind up popping up, retesting, it's that double bottom with those 1, 2 failure, and then again as it runs up, right? It's that bear trap entry. And again, I have a lot of examples of these inside my free video classes, right? That again, two-legged pullback, double bottom. It could be that V bottom, although not my favorite, right? That V bottom could also work as well. I'm not going to go over the entire thing right now, but again, same basic idea as the S&P. I would love to get that bath, right? I'd love to get a run lower, that crown reversal off that low back up, right? Or again, let them roll over, retest, and then 1, 2, double bottom reversal back up again. So again, I don't mean to rush through it, but we covered that before on the S&P. Let's talk about ranges, okay? Ranges. If you know me, if you're taking my free video classes, if you're in the trade room with me every day, I love ranges, right? Ranges are one of the easiest ways to make money. There is some very easy ways to trade a range bound market. Whenever we get a big move one day, we oftentimes see a range the following day. Tomorrow is also a Friday, and next week we have some huge corporate earnings reporting, so it wouldn't surprise me at all if we saw a range go into tomorrow. So let's talk about ranges. Most important thing about ranges is that we're going to have a bull market into a range, and I'm doing my best right now to kind of anticipate this. This may not be the range for tomorrow. It may be higher here, so just bear with me on that. But if we go sideways in a range, okay, one of the easiest ways to make money in situations like this is we use the prior range for the breakout pullback, okay? Remember, ranges act like magnets, right? Ranges act like magnets. The most recent range is the magnet. And when I have a bull market into a trading range, I'm going to find levels of support below the range, like this previous trading range, and look to buy off those areas of support. We talk a lot about breakout pullbacks. I can use this for a breakout pullback area, and I can use that range for support. Now, what I like most about ranges is how they rotate. So this is my favorite way to trade a big move market. If we do get that pullback, right? If we do get that pullback, remember, we're not trying to pick the bottom on this. We're going to go out, let those bears come in, and let them try to get short. Once they get short on this, now I can use their stops to fuel the move. Now, where does the market want to go? The market wants to go back up and take out the high of that range. But more importantly, like we saw today, ranges love to rotate. So now the amount we go below the range can project now above the range, and that will give us an idea of where to leave that runner. We talked a lot about a Friday mindset, right? Get in early and leave the runner. This is a good example of where to leave that runner. Now, once we find our entry off again, what I would call a failure pattern in our trade room, we then go out and we begin looking for add-on entries. We call trade the rotation, right? Trade the rotation. Trade the pendulum swing. Trade the rotation. We know where the market wants to go now. Now, as we're going higher, let's use that same little bear trap pattern we talked about earlier and buy it as it rolls higher. All right. The goal is this. The goal is if we do go sideways here for tomorrow, and again, this may also apply to the S&P as well, and bear with me, this may not be the exact location for the range. It may go up a bit higher and go sideways there. Again, I don't know what tomorrow will bring. I just know that whenever I see a big move like this, we oftentimes see ranges, and they are easy to make money with. Find that range, find support levels below the trading range. I love the idea of using that previous trading range for a breakout pullback area. Don't try to pick the bottom. Trap those bears with failure patterns. And then as we're going higher, think about that bear trap, that higher high in price and that trap below that low. And remember, if we're lucky, we'll draw a trend off the highs, a channel off that low. It is tough to lose money on an entry like that. Take your profit off, right? Half off, top of that trading range. Leave a runner for that pendulum swing. And I'll tell you, that could be one of the most lucrative trades of the week here, right? Kind of a fade the breakout and a breakout pullback, right? A breakout pullback of the previous range, right? And then buying that or fading that breakout on the current range overhead, all right? Again, this can easily apply to the S&P as well. One final thing, all right? One final thing you want to be careful with when it comes to ranges is a fake out breakout, all right? A little bonus for you here to reward you guys for sticking around all the way to the end, all right? So on a range, be very careful if we go up, all right, and then crack back down again. Very common, especially since we're running right into overhead resistance, okay? Now, how would you sell that? How would you sell it? You want to sell that bull trap, right? Sell that bull trap. Go up, buyers once, buyers twice. Sell that bull trap for that short, okay? Now, watch very closely. Remember, the big money is buying that dip, right? Buying that dip. Now, take the amount above. Take the amount below, right? We saw back here. Take the amount above. Take the amount below. That will give you the idea of where to look for the entry, okay? Then, when we get that rolling over now, right? They roll over now. Now we get those bears trapped in. Let them try once. Let them try twice. Get those bears trapped and squeeze those stops right back up again. All right, so be careful with that fake out breakout off the high. Again, if you're shorting those bull traps, half size, quarter size, use that pendulum swing to time the location. But again, don't pick the bottom. Trap those bears in and whoop, right back up and retest that high. All right. I'm getting excited for tomorrow. It's been a fantastic week. It's been an incredible first month of the year. I can't believe tomorrow is the 19th of January. We're going to keep the good times rolling tomorrow. The game plan is all set, but remember, the markets are full of surprises. They're going to throw some curveballs at us tomorrow. So tomorrow morning, 8 o'clock Eastern time, come do this with us in the trade room. I'll put all the membership links. I'll put the free classes links, my Twitter feed. I'll put everything you need in the description of the YouTube video. If you're here for the first time right now, start with the free classes, learn the basic fundamentals of the strategy, right? Start getting your charts moving in the right direction, and soon you'll be trading along with us sometime soon in the morning trade room. Questions, any errors getting into the video course, please don't be a stranger. If you have questions or having trouble getting access to the video classes, call the office, send me an email, use live chat. We're here to help if you guys need help along the way. All right, guys, let's wrap it up. Get a good night's sleep. We'll come back tomorrow. Keep the good times rolling. If I don't see you tomorrow, we'll come back on Monday night and we'll do it all again next week. All right, guys? Hope you learned a bunch this week. Hope you earn a bunch tomorrow morning. And hopefully I'll see you sometime soon in the morning room as a new student. Guys, my name is Joseph. Thanks for being here. Thanks for watching all the way to the end. Enjoy your evening. Be well. Be nice to each other. And you better be here next time. Adios, amigos. Bye-bye for now.